Hey, what's up everybody? I'm Waller's Wallet, and in this video, I'm going to give you 5 reasons why you should not only have a health savings account, but why you should be contributing as much money to this account as you can, because it has some great tax benefits. Now, if you want a simple way to help out the channel, consider hitting that thumbs up button. Also, don't forget to subscribe to the channel and turn that bell notification on as well, so you don't miss out on future videos. Now, my wife and I, we've been contributing to our health savings account for many years now, and we've used it for plenty of medical expenses, from IVF costs for our first son to labor and delivery expenses for both of our sons, and other medical expenses as well. And in order to be eligible for an HSA account, you do need to be covered under a high deductible health plan. And with an HSA, you do need to use it for medical expenses for that money to be able to be used tax-free, and this can even help you save for retirement. But contributing to an HSA account has so many advantages, so here are 5 reasons why you should be using it. In reason number 1, it reduces your taxable income since the money you contribute is pre-tax money. And this is a great benefit since it means that your taxable income will be lower since you're putting away money before the government can get their hands on it. This is just like if you contributed to a traditional 401k. This money that you'd be adding into your account is pre-tax, and it reduces your tax burden because it's tax deductible. And really, who wouldn't like to reduce their taxable income, especially if it benefits you, right? Now, there are limits on how much money you can contribute to an HSA account in a year. So for year 2020, individuals can contribute up to $3,550, and for families, they can contribute up to $7,100. Now, if you're 55 years or older, you can contribute an additional $1,000 for a catch-up contribution. Now in 2021, this will actually be increasing to $3,600 for individuals and $7,200 for families, but that catch-up contribution for people 55 and older will still be at $1,000. This means if you are a family with a combined household income of $75,000 for the year, and you maxed out that $7,100 HSA contribution for the year, this would reduce your taxable income from $75,000 to $67,900 for year 2020. And reason number 2, you can invest this money. Now, I love making my money work for me, and this is another great benefit that you should be absolutely taking advantage of, because not only can you contribute this money pre-tax, but you can choose to invest it if you want to, which is fantastic. And the money you put into your health savings account, you can just let it sit in your account basically like a savings account, and it'll earn interest, which really won't amount to much, and you won't even be keeping up with the rate of inflation. Or you can choose to invest it and give that money an opportunity to grow. Now, the funds which you can invest into are going to be different based on the company your HSA is with, but there are plenty of options which you can invest your money into, and you should definitely take a look at this. And just like with other retirement investing, the longer you leave your money in this account, the more time it has to grow, and historically, the market does increase. In investing your HSA money, it has a big benefit, which leads us to reason number 3. The interest and money you make from your HSA investments are tax-free. Now, this is a huge benefit because the HS money you decided to invest, when you withdraw it from medical expenses, all of that money you've earned is tax-free money. So you've sheltered it away and put in your HSA account. You don't pay taxes on it. You don't pay taxes on the money that you've earned from investing it, and you can use it whenever you need to for your medical expenses, not paying taxes on it as well, giving you a triple tax advantage. And being able to invest your money offers you more ways to increase your HSA money without actually contributing more money to that account. And this is different from a traditional 401k account, for example, because that money is taxed whenever you decide to withdraw it. It doesn't matter if you use it for a healthcare expense or if you decide to buy yourself a giraffe, which buying a giraffe would be pretty cool. And with traditional retirement accounts, you do need to wait until a certain age to withdraw that money or you're going to be penalized. But with an HSA account, you can withdraw that money at any time for medical expenses. But this adds an extra layer of savings and opportunity for you. And not only can this help you when you need it for medical expenses, but it can also help you when you reach retirement age, which leads us to reason number 4. You can use your HSA accounts as an additional retirement account. And yes, you can use your HSA funds as an additional retirement account, just like an IRA or a 401k. But you do need to wait until you're 65 years or older to withdraw on this money to do that. Now, once you're enrolled in Medicare, which for many people happens right around the age of 65 anyways, you can no longer contribute to an HSA account. But you can always continue to use your HSA funds tax-free for medical expenses at any age. In retirement, this can help you pay for expenses like your Medicare premiums, for example, or other qualified medical expenses. And as we age, we typically do have more medical issues, so this could be a nice way to save for those expenses if you can or if you wanted to. But once you hit 65 years old, you can actually withdraw this money for non-medical expenses just like you would with any other retirement account. For example, if you contributed $7,000 to your HSA every year and plan on having this account for 25 years, adding $7,000 a year to it, with an average rate of return of 5%, you would have an additional $350,000 for retirement, which is a nice chunk of change. Now, if you did decide to withdraw this money for non-medical reasons, you would pay federal and state tax when you withdraw this money, and your state taxes are going to depend on where you live. Now, this isn't as great as the tax-free uses for medical expenses, but this does make your HSA account an additional option in addition to your 401ks and IRAs for retirement. And since you can invest this money, this could lead to some extra income later in life. But there's actually a workaround to this, but you need to be organized and you need to keep those medical receipts. Because as of right now, according to the IRS, you're permitted to take a distribution at any time as long as it's used for a qualified medical expense. So if you had a medical bill today and kept the receipt for it, and in 20 years from now, you could submit that and reimburse yourself for this money, and you don't even need to be 65 years old to do this. And this is going to give your time money to grow when you invest it and essentially pays you back or lets you cash out your HSA money without a tax penalty for those older medical expenses. Now, if you can afford to pay your medical bills now without touching that HSA money, this could be a big money saver for you later in life, but just be sure to have your paperwork in order. And reason number 5, this money goes with you where you go. Now, the great thing about an HSA account is that it's your money. If you leave a job to take a new one, maybe you're laid off, or maybe you want to make a career change, all that money you put into your health savings account, it goes where you go. Because accounts like flexible spending accounts are a use it or lose it type of plan, even if you put your own money in that account. Or even maybe a separate account an employer gives you where they put money towards your medical expenses, that money may not be yours. I've actually had places where an employer will put money into a separate account that I could use it for medical expenses, and if I left that employer, poof, it was gone. It didn't matter if I had $1 in that account or $10,000. That money was gone. So having an account that's all yours and can go with you wherever you go is a great benefit, because life does happen, and being able to use that money for medical expenses, planned or not, or even a retirement is great. And it could also help you not feel trapped in certain employment situations if medical expenses were a concern. But knowing that money can't be taken from you or lost if you don't use it is comforting as well. Now, health savings accounts are a fantastic vehicle to help you with medical expenses and even save for retirement. And if you're someone who has access to a health savings account, then you should look to contribute money to it if you can, because there are just so many great reasons to do so. So tell me, do you contribute to an HSA account? Hey everyone, thanks for tuning in this video. If you want to help support the channel, take a look at the links down in the description below. And if you know somebody that could benefit from this video, feel free to share it with them. And until next time, safe travels and take care.